It's great to welcome back to the program today J.L. Collins, financial author and investor. A revised and expanded edition of his book, The Simple Path to Wealth, is out now. A book that one of my favorite personal finance books, and it's on the list on my website. JL, it's so good to have you back on.
Hey, it's a pleasure to be back here with you, David. I'm looking forward to the conversation.
So, listen, I mean, I think one of the interesting things about the timing of this conversation is if we think about the last few months and the alleged Liberation Day event of April 2nd, the announcement of, and then pause of, and then reminder that they're still on of these various blanket tariffs. The
Right.
point of it all is whatever was announced, whatever was done, whatever was taken back, it created in the stock market some ups and downs, and for a period of time, they were pretty significant downs. The many of your expected commentators were saying it could take 10 years to get back to the stock market level where we were just months ago. Of
Right,
course, we're back there now, right?
right,
And
right.
so I think to kind of open the conversation, as the average person is looking at what could be political and or economic instability and thinking, what do I need to do right now in the market financially? Is the answer once again proven to be figure out your asset allocation and stick with it?
That is the answer. And even the shorter version to what should I do now is nothing. You stay the course, which is always the answer, right? So if you go back 4, 6 weeks when we were in the middle of this downturn triggered by the tariffs, nobody certainly, well, not me, would have predicted that we'd be back in positive territory already. But the corollary of that is nobody knows where we go from here,
Right.
right? I mean, it could be that we're back on the way up on a growth trajectory. It could be this is a brief pause before we hit something much more serious. For the record, I'm not a fan of the tariffs. I think they're a terrible and dangerous idea. But one of the things that I've learned is my opinion doesn't matter to Mr. Market at all, and it will do whatever it is going to do. 6 weeks ago, my social media and blog were lighting up with predictions of doom. And what I say all the time, the same thing I said COVID is there's always something scary when the market plunges. That's why it plunges, but it never lasts. Eventually it turns around and continues its growth. I don't know if we're at that turnaround part now, or as I said earlier, but that's always the trajectory. And if you look at COVID, it's even a better example because it's in the rearview mirror and clear. COVID killed about 1 million people, which is tragic. But in a population of 330 million, it's a tiny fraction. So it's not a major disruption. Had COVID been the Black Death, which killed 50, 60% of the population back in the
Right.
Middle Ages, that's a civilization ending event. I mean, but then it doesn't matter where your money's invested.
Right. Having a little gold is not going to make a huge difference if
Not
that's
make
the
not going to
scenario.
make any difference at all.
Yeah.
Yeah, having
Um,
guns
you
and ammunition might.
You right. I have friends who I consider very smart and have sold businesses, do high level legal work, high level finance. And over the last couple of weeks, they look at me and they say with total conviction, this is a dead cat bounce. We're going to see a 30% drop in the market. They are as convinced as they are about the sun coming up tomorrow. Or I have other friends who say, we got through it. It's up, up, and away from here. Trump's not really going to put the tariffs back on. It's smooth sailing. And to all of them, I say, how do you know that? I have no idea which of those two scenarios is more likely. And I'm building my outlook over the fact that I don't know. If you don't know, what would it make sense to do is kind of my approach. Are you surprised by sometimes people who clearly are intelligent, thoughtful people who seem convinced that they know it makes sense to get in or get out at any particular point in time? I have no idea about it.
Yeah, I know. I'm not surprised by that. In fact, at one point in my life, I was probably one of them.
Me
It
too.
it seems so tempting to think. So if we reel back to 2016, when Trump first won the election. Whether you love Trump or you loathe him, one of the things that was common wisdom, and I think accurately, is he is a disruptive force. And I, in 2016, sat back and I thought, one of the things I know about the market is it hates disruptive forces.
Right.
It hates uncertainty. Maybe I should go to cash, which was completely against my discipline. And fortunately, I didn't, because I stuck to my discipline, because I recognized, while it seemed so absolutely clear to me what was going to happen, I don't really know that. That's just my opinion. The market doesn't care about my opinion or yours, doesn't care about the opinion of the people who think it's going down 30%, doesn't care about the opinion of the people who think it's going up from here nonstop, or it may just plateau for a while. Market doesn't care. And when you start thinking you know what the market's going to do, you've fallen prey to hubris. Nobody can predict it. So you stay the course, knowing that the market will recover, whatever
What
it
do you
does.
say about someone who doesn't take an extreme perspective, like I'm selling it all and going to cash, or on the other side, I'm putting in every dollar I can find into the market because I expect it to go up? But for example, I was listening to Scott Galloway recently,
Mhm.
who his approach was, I think over the next, I'm paraphrasing, over the next 10 to 15 years, US stocks, I believe, are going to be flat. So I'm still dollar cost averaging. I've still got my asset allocations that I'm thinking of that are appropriate for my situation. But I'm moving into, I think he said, Asian and some other continental markets. It's a shift maybe in the focus, but more or less sticking to the plan. On the one hand, there's some appeal to that intuitively. On the other hand, I ask myself, why didn't I already have those in my asset allocation if they were such a good idea? Am I being swayed by news and the politics of the day? What do you say to an idea like that? Just shift into Asian markets as an example.
Yeah. So again, you think you know what's going to happen in the future, and you don't. It could be that Scott's right. That's exactly what will happen. But I remember a decade ago, David, uh, all the smart people in the market were saying, the market has had such a great 10-year run, or whatever, however long it's been.
Yeah.
Just can't expect these returns going forward. You should get used for the next decade, which of course now we've lived through, of maybe 4% returns in the market. Well, the markets had a stunning decade. I mean, a stunning decade of growth. So they were all wrong. Now, I stayed invested because that's my discipline, not because I knew the market was going to have a stunning decade, but because I knew I didn't know. Right. So I have no idea what the market's going to do in the next 15 years. For instance, the first part of this year, European stocks have absolutely trounced the US market.
Right.
That hasn't happened in 10, 15 years. Now, is that the new trend? Because there have been historically times when international has outperformed US. Hasn't been true for the last 10, 15 years. Maybe that's the next 10, 15 years, as Scott thinks. But I don't know that. What I do know is that the US accounts for 60% of all publicly traded companies in the world. When I invest in VTSAX, which is a total stock market index fund, the large majority of those companies that make up that fund are international by definition. And so, assuming the rest of the world, like Asia and Europe and Africa, continue to grow and prosper, their markets will do well, but so will my VTSAX. It will
Mm,
benefit through that. So I don't feel the need for international. By the way, that puts me very much out of step with the vast majority of people talking about this stuff
yeah.
and writing about it. And so if somebody said to me, hey, JL, I take your point, kind of makes sense, but I'd feel more comfortable with some international, I'd say, God bless you, go for it. Buy a world fund, a low cost world fund from somebody like Vanguard, and call it a day. In fact, that's what I tell my international readers, because the US is the only country that is dominant enough in the markets that you can get away with that home country bias. So if I were anywhere else in the world, I'd already be in a world fund.
I want to ask you a little bit about some of the more speculative assets where the natural one to talk about is Bitcoin and cryptocurrencies more broadly. We talked about it a little bit the last time you were on, but
Yeah.
now we've seen, even presidents get involved in meme coins, and it's really, we're seeing certain things that I don't know that I would have ever predicted 5 years ago.
Right.
My view to my audience has been, and this has been my view for 12 years or something, I have absolutely no idea what the future of cryptocurrency or Bitcoin specifically is. Once it was around long enough that I said this might be something, I decided 2.5% of my assets felt like a nice balance where if I lose all of it, I'm okay, but I've got some upside exposure. I don't know. I had zero predictive power as to where it was going to be. As it went up, I would sell down to my 2.5%. When it went down, I would top up to 2.5%. And I just wait. I don't know what's going to happen.
Right.
Where are you now with, maybe for some people it's 2, maybe it's 4%, some portion of their assets in something that is known to be speculative? What's your guidance on something like that?
So first of all, let me address that whole concept of taking a small portion of your portfolio and playing with it, so to speak, because it's a question I get all the time. Is
Yep.
it okay if I take 2, 5, 10% and play? Sure, it's okay. Uh, but understand that if you are correct, it's really not going to be enough to move the needle because by definition, you want to put in not so much that won't move the needle if you're incorrect. So that's one of the reasons that I don't bother. But talking specifically about crypto as an example
Yep.
and Bitcoin, my take on it is real simple. It's way too volatile to actually serve as a currency, right? Currencies need stability in order to function as a means of trade. That's why inflation and, for that matter, deflation are so terribly damaging, is because suddenly the currency isn't reliable. It's either worth less and less as you go forward in inflation or more and more in deflation. And that makes it unsuitable for a means of trade. So crypto is not at that stage yet. Maybe you'll get there someday. So what it really is not an investment in my view, but a speculation.
Yes.
So what do I mean by that? Well, an investment in VTSAX is in companies that are actively operating to sell products and services, to grow their businesses, and hopefully, if they're doing it effectively, to make a profit that we as owners benefit from. A speculation like crypto or gold for that matter, or classic cars or art is where you're buying something and you're anticipating and hoping that at some point in the future, somebody will pay you more for it than you paid for it, right? That's a speculation. There's no underlying dynamic creating value there other than what the world around you continues to perceive as value. Now, to be clear, if you'd invested in crypto 10, 15 years ago, you and held through the very wild and rocky ride it's been, it would have served you extraordinarily well. But that's the nature of a speculation. You don't know. Were lots of other speculative investments you could have made 10, 15 years ago that crashed and burned. So the question, if you're looking at crypto or Bitcoin in particular now, is not that 10, 15-year run. It's where does it now? It's $100,000 a coin or something. Where does it
Yeah.
go from here? And again, to your point, nobody really knows. So your 2.5% investment may do well, it may not, but it's not going to move the needle in your portfolio all that much, probably anyway.
All right. The Simple Path to Wealth in its new expanded edition is now available. We've been speaking with the book's author, J.L. Collins. JL, always great to talk to you. Really appreciate it.
It's always my pleasure, anytime, my friend.